Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, today for the next few minutes we're going to be looking at Bitcoin. But first, a quick word about the many benefits of becoming a member of the Green Star Trading Patreon. If you just want to show some general support for what I'm already doing on YouTube, then you can join Tier 1 for £5 a month, and it will also bag you an exclusive video each week that won't be available on YouTube. If you join Tier 2 for £10 a month, you'll get the same exclusive video from Tier 1, but you'll also get voting rights towards monthly deep dive videos. You'll get access to all of the educational videos on the Patreon, including my original Elliott Wave Theory series. You'll also get early access to YouTube videos before they become available, and you'll also get access to the public Discord, where there is a multitude of channels in which you can engage with the community and me directly. Now, if you want to join Tier 3 for £15 a month, you get all of the things in Tier 1 and Tier 2, but you also get access to my monthly dividend calendar and stock rating system. This is where I list my favourite stock picks for the month, all of their ex-dividend and payment dates, and then give all of the stocks listed a rating out of 30 based on my own proprietary rating system. I will also offer the service of looking up any ex-dividend or payment dates for stocks you may be interested in if you can't find them for yourself, and if you have a particular stock that you are interested that isn't on the calendar of a stock rating system, I can look at it, rate it and come back to you with the results. Alright, thank you for listening guys, now let's get back to the video. Okay, welcome back guys. We're going to be looking at multiple Elliott wave counts today. We're going to be discussing current price action, my feeling towards it essentially, and looking at some of the options that we've got going forward. So without further ado, let's get on with it. I'm not going to spend too much time recapping price actions of this current point. If you want to go and see a more long-term view of Bitcoin as how we've got up to this level, then go and watch last week's video. I covered it in that, and I've covered it in previous videos as well, but we're just going to focus on current price action at the moment and look at the possibilities. Okay, so here we are on the day chart in log scale. Let's just come off of log into a minute into linear, and we're just going to have a look at our bullish interpretation and our bearish interpretations we've got here. We're just going to zoom into the more recent price actions. I think I've got a duplication of a count going on here that I need to delete. Yes, I do. We don't need that currently. Okay. Right then, so let's keep it super simple. Looking at the bullish count, we are looking at, let me bear with me one moment, and we don't need both of those. Okay, so the bullish account assumes a completion of a primary wave 4 here, okay, with an expanding flat pattern with 5 waves down in a C. Okay, so we've covered this multiple times, so that's how we're viewing the bullish case. And then from that low, we're looking at a 1, an expanding flat into a 2, zigzag into a 3, down into a, 5 wave up impulse into a 3, zigzag down into a 4, and a little diagonal to finish off a 5 into an intermediate 1. And now we're looking at a 3 wave move down into a 2, and then a 1, 2, and off we go higher. Right, so that's the basic bullish interpretation. So what we're going to do is come down to the hour time frame here for a minute, and we're just going to have a closer look at the more recent price action. So my feeling at the moment is I'm not at all convinced. Okay, I'm not convinced this correction's over, although we've had this nice move regarding, if we've got a channel I think for it. Yeah, so let's have a look. Alright, so we've got this parallel channel, and we've come down in an A wave. We've gone A, B, C into a B, and potentially 5 waves into a C. Okay, and then we could have an impulse here, and then a 1, then a 2, then a 1, then a 2, then a 1, then a 2, and now we're being off in a 3. Problem I have with this is this recent move down, this looks like a free wave move back up. This looks corrective to me, and therefore further downside I think is more likely. So perhaps we haven't completed this intermediate wave 2. Perhaps needs to come down lower, and this is either going to be an extended wave C in a zigzag, or perhaps some kind of double zigzag combination, perhaps. So I do have an alternate for that. So that's what we're going to look at now. So we're just going to hide away this bullish count. There's the trend line, sorry. Get rid of this bullish count, we don't need those trend lines on here for the moment. And we're just going to bring up an alternate bullish case. Okay, so all I've done here is place the pitchfork off of this initial A, B pivot. And we seem to be currently channeling between the 61.8 here and the 61.8 here. And just kind of bouncing around in between here at the moment. So this works on the idea that we're going to have an extension in the wave C to a deeper wave 2. So rather than R2 being complete here in our other count, which is saying this is a completed 2, we've gone A, B, C, and now we're going up. This works on the idea that the C leg of this zigzag is going to be an extended C leg, and it's going to come to a greater extension than parity. I've targeted the 1618 down here, which is not the cutoff for a C. We can have a C which goes beyond that, but once we go beyond the 1.618, we really have to lean into the idea that we're observing an impulse wave and an extension within a wave 3, as opposed to an overextended wave C. So that's kind of where I'm aiming for the cutoff at the moment, which would be a very deep 2. I mean, we've come all the way up here, then we've come all the way down to about 90%. Okay, and then that would be the 3 moving up. So this is an alternate bullish case where this looks corrective, and therefore we're going to come down in 3, 4, 5 at minute degree, 1, 2, 3 into 4. That's minuet into minute, down into 5th minute wave to complete the minor C to complete the intermediate 2, and then we'd get moving. So there's the bullish interpretations that I can see at the moment. I'm pretty much neutral regarding bullish and bearish counts at the moment. I was, when I saw this 3 wave move coming down, quite bullish that this was a completed 2, but since the recent price action has been very sideways, very unconvincing, we have not seen a nice, powerful, clear, I mean this looked like a 1-2, but we haven't seen a clear impulse wave up out of here. It hasn't materialized, and therefore I have my doubts. So currently in a pretty much 50-50 stance at the moment. I need to see something convincing. Okay, I need to see a completion of this wave 2, so either this extended C, and then if I get a bounce, a nice impulse wave off of a big retracement where we don't take out these lows, otherwise it wouldn't be a legal wave 2, we need to stop before those lows. If I then saw a bounce from here and a 3 wave pullback, I'd go long just on bloody principle at that point, because even if we go lower, I've got a wonderful position to put my stop in. I can easily protect myself from further downside. We've come so deep that I have to really take that trade either way, and if I were to get stopped out, I'd get stopped out earlier and take a minimal loss. But if you're right and this is an impulsive wave and a pullback, then I think it's just a safe trade. Why wouldn't you take it? You don't have to, you're not obligated to, but I think if you have called the wave 2 low at that point and you've seen a reversal of trend, and we'd look for the same reversal conditions as we always look for, we'd want to see that initial move up and move back supported by an increase in volume. Okay, we'd also want to see our momentum indicators shift into a bullish reversal. We'd want to see basic analysis support that, and we'd want to count off of the low of an impulsive 5 wave move and a 3 wave pullback. We want to see all of those things before we decide to go long. And if we get those reversal conditions, great. And if we get them further down, even better. All right, because we may have called a low and have much more to gain as a result of it. But at the moment, I'm not convinced either way. So that's the bullish case as I see it at the moment. We're either got a very odd beginning of an impulse here, 1, 2, and this is going to form an impulse. It doesn't look like it to me at the moment. So this suggests a completed zigzag, and we've completed the 2 and we're going higher. I have very little confidence currently that that's the case. The alternate is that we're going to have an extension in the C to get a deeper 2, in which case if you did get a reaction and reversal conditions once this completes, and I think that's a very sound long trade with a very safe stop available. So now we've discussed the bullish options, let's have a look at the bearish case. Now the bearish case hasn't changed for months and months and months. We're still looking at the same thing. And I still think it's, you know, my what's the word, leaning towards it has switched on and switched off, as is often the case as new price data comes in. We have to be flexible and we have to be prepared to interpret the data as it comes. We can't force our view onto the count, and we can't force our view onto the data. We have to wait until we have something convincing to tell us what we think we should do. So the bearish case is the same, you know, since the start. We topped out in a wave 3 here. We've had a 5-wave move down for a wave A. We've had a wave 3-wave move up into a B with an overextended C. Okay, now if we can get up here some other way, there might be a possibility. If we can get, for example, a 5-wave structure in here and call this RA, this would be a truncation. I've discussed this a long time ago in the previous count. Then perhaps you could say this is the A, this is the B, and this is the swing, in which case this C here, external correction of the A wave, this would be a flat with a less extended C, since we're using a bigger pivot. But I actually don't like that, because this looks clearly to me like 5 waves. I've mentioned it multiple times. We get a lower low. I'd rather live with an extended C than a truncated fifth in an A wave. That's just my preference, because the odds are more likely to get an extension in the C than a truncation. You see them very rarely, but if you do have an interpretation which supports that, and you'd rather view this as the pivot for the B wave, that's fine. We end up in the same bloody place either way, so it's really not that important. What matters is that we retraced from the top to the low. We've retraced essentially to the golden ratio here. And then which one have we got set up here? Okay, so we came into the 61-65 zone, we found resistance, and then we started selling off. Okay, and so now from a bearish point of view, we've just gone 1, 2, 1, 2, and that's it. So this would now be 3, 4, 3, 4, 5, and we've got an extension in the wave 3 taking us to the minor wave 3, to the minor wave 4, to the minor wave 5, to a low, and an intermediate C taking us somewhere around 20k. Okay, so if we just bring up talking about targets for the bearish count for the moment, let's just, I'm sure I've got that somewhere. I really do need to go, even though I'm keeping this as tidy as I can, I think I have probably repeated, there it is, that's the, have we got one here? I think I've probably done this several times. That's the low from there, and that's that low. So let's just throw these into our fibs folder, and we can relabel these at some other point. I think I need to have a bit of a tidy up at the moment. Which pitchfork is this? This is the pitchfork based off of the idea that the bullish count is correct and we've done A, B, C and we're just bouncing along the bottom of it before we break higher. This has got to turn around. If just talking about the bullish count for a second, this has to turn around imminently and get bloody moving now if it's going to convince us that this is correct placement of this pitchfork and this is a completed 1-2. Like I said, I have my doubts, but if we saw an impulsive move from here higher, I would change my view again to support the idea that we had a close to parity correction complete in an intermediate 2. Now getting back to the bearish case, extension in the 3, 4, 5 down to complete intermediate C of primary 4. So do we have a pitchfork for that? I think we would essentially lead into the one from the alternate count, which for some reason, no, that's the alternate bullish count, so let's bring that up. Okay, yeah, so basically the path that we're saying for our extended C would essentially be a very similar path to our extended 3, 4, 5. Okay, so we'd be heading down in this direction. We've got some targets. Okay, so I've got two parity targets where the length of C here will unfold to match the length of A, and we have it in log scale here at 23,267.58, and we have it in parity also in linear scale here at 16,680.66, so significantly lower. Okay, neither would invalidate the long-term primary wave count. We would complete the wave 4 prior to breaching the top of the primary wave 1, and then from here we would rally into that fifth and final primary wave in what I have as cycle wave 3. So that's basically how I see things at the moment. I've definitely pivoted to a neutral stance at the moment, but if I had to lean a certain way, I would say that the current price action looks bearish. This does not look impulsive. This to me here does not look impulsive. Now if we come roaring out of here and we break this downward trend, right, then that's fine, we can reconsider. We've got an impulse, so we'd be waiting for a pullback, set up a stop to take the trade higher, right? But it hasn't happened, and we can't assume anything until it does. The least line of resistance currently is to the downside. Okay, with the corrective kind of behaviour we've got going on at the moment, the least line of resistance is further down. We can see that our pitchfork based off of this 1-2 pivot here in the bullish count, we've broken through the initial bound. If we just zoom in for a minute to do this, come back down to the 2 hour, shall we? So you can see, going back to the switch off the bearish count for a moment, bring back the bullish count, which is suggesting that we've stopped here. Now we do have an orange count here as well, 1, 2, 3, 4. I don't have much confidence in that being correct at all, but it's still legal until we breach this wave 1 high back here. So let's just, you know what, I may already have done that. We've got a horizontal ray here. No, bear with me one moment. If I did put it there, then I have deleted it at some point. So what I'll do, it's very unlikely, but this wave 4 idea that I think I discussed in the previous video, that this is a wave 4 and that this is a zigzag and this was a flat pattern, once we break this price here at 35,515 spot 45, let's just lock that in. We'll say orange count wave 4 invalidation. Okay, let's get rid of that capital letter, and we'll just throw it into orange so I know what I'm dealing with, and then we'll just put these together in a folder. Okay, I should have probably added that last time I did this, but either way, it's a secondary concern. It's just another alternate. Okay, another alternate idea. That gets completely switched off once we go through this level here. So if we go through this level, the idea that this is 1, 2, 3, 4 is incorrect. It's already unlikely as we breach the outside of this pitchfork. So on that note, let's get back to what I was going to discuss here. So, keeping it simple for a moment, we've breached the outside of this pitchfork. Okay, we've come down, we've tested the median line here, come back to the 61.8, failed to reach the median line here, and then price action has continued lower. So the median line essentially sucks the price to it over time. Some people call it a magnet. Now, as we can see, we failed to get back to the median line. We came back, tested the outer bound, and have since been rejected. That's why this current price action looks bearish to me. We've had this rejection on the outside. Now, if we hadn't had that rejection and we'd seen an immediately bullish move through back into the pitchfork 1, 2, and off we went, breaking this trend, then the idea that this was 1, this was 2, this was 3, and this was 4, that would actually be the most likely scenario. But that's currently, I think, the least likely scenario. we've either gone 1 and we're looking for a deeper 2, which will break this pitchfork completely, and then we can have a new pivot, 1, 2 at a larger wave degree and move up. That's 1. The alternate is the bearish scenario, that we're just going 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, and we're just going to go lower. Okay. Alright, I don't think I've got anything else to talk about now from an Elliott wave perspective. I hope I haven't confused you. Just keeping it simple for the meantime. I'm neutral with a slight slant towards a deeper 2 or the bearish case. That's what I'm leaning towards more at the moment, just because I'm so unconvinced by this price action here. It just looks like it wants to go lower, so I'm expecting lower pricing in the meantime. Like I said, if we break out of this downward trend and we have an impulsive move up, I'll change my mind again and consider the bullish idea that we've already bottomed in the 2. But for the meantime, looks like we're going lower. So let's get rid of all the count now and do some basic analysis as well. So hide this thing, get rid of this thing. Okay, and we're just going to bring up our momentum indicators. We're going to back out to the weekly time frame here to do this. Let's put the chart into log. And we're going to bring up our momentum indicators. And we're going to bring up our exponential moving averages as well. Okay. Right then. So our exponential moving averages, in case you're new to the channel, we have a 10 in yellow, 20 in blue, 60 in orange, 250 in green. We also have an RSI set to a 10 close, with the green 30 level representing oversold and the red 70 level representing overbought. And we also have a MACD with a blue line here, which is the 10 moving average, and we have a 20 for the signal, which is the orange line here. So on the weekly time frame, we are below the 10 and the 20 exponential moving average. We've back tested the 10 with a wick for the week to the upside and now moved lower. We're still within the bounds of the previous candle, so we're still in some form of internal move, most likely an internal correction before heading lower is my suspicion, as I pointed out with the count. So internal candle at the moment. Right, still well above the 60, which has acted as very strong support in the past. No reason to suspect that if we are expecting the 1, 2, 3, 4, 5 into a 1 and then A, B, C down into a 2, slightly less wiggly than that would be nice. But if we were expecting a 1 here down into a 2, then perhaps the 60 is a perfect place to find the wave 2. You know, strong support is acted as before, it could act as again. We are currently in neutral territory on the RSI, neither overbought or oversold. Will we get an oversold reading if we break down to the 60? Depends how quickly, how violently we do it, and how quickly we bounce. But yeah, it would be possible. We have the average crossing over the signal on the weekly time frame here, declining bullish momentum, darker green bars in the histogram, coming very much back to the zero bound or close to the zero bound. Moving averages aren't that far away at the moment on the weekly time frame. We're still in positive territory though, but we could move down into the zero bound here, start to see some red bars on the histogram. That would support more of a deeper correction, and the bearish case looking for a lower 4 would probably be more suited to that scenario. Let's come down to the daily time frame and take a look where we are. Previously on the daily time frame, we broke through all the major averages, stayed below the 10, the 20 and the 60 and the 250 before rallying back up. Okay, we've recently pulled back to the 60 as our first support here, had a bounce back above the 10 and 20, and now we've pulled back to the 250 as our support here. So if the bearish case is going to hold, then this will have to remain as support for the meantime, and we need to get an impulsive move out of here, breaking this trend higher, and then we can be more bullish. But like I said, the current price action just doesn't convince me at the moment, and therefore I'm neutral. I would suspect that if we do get a break of this 250, then the extension that we're talking about in the C or the 3 would materialize quickly, this is major support, and a thrust down into oversold conditions would follow immediately. At that point, you're waiting for a bounce. You're waiting for a completed move down and some kind of convincing impulsive bounce to come. So that's that. We have gone from, I mean, look at the divergence we had here. High, lower high, lower high, lower high, 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 which has now led to this correction. We've gone from overbought to oversold, just not particularly convincingly. Correction, further move down into oversold conditions perhaps. Bearish momentum intact the whole time. Here on the MACD, series of lower lows and lower highs. Still now comfortably below the zero bound on the daily time frame. Still got separation between the signal and the average here. Still heading lower. Bearish momentum still present. No sign of reversal conditions as of yet. So on that note, we'd want to see reversal conditions here in the momentum indicators. We'd like to see the average cross over the signal and then push back into positive territory. We'd like to see an impulsive move breaking trend, and we'd like to see confirmation in the RSI, and we'd like to see an increase in volume as well on the daily time frame, none of which are present yet. So no signs of reversal currently. Therefore, the least line of resistance is to the downside. So that's how I'm leaning at the moment. Thank you for joining me on this technical analysis of Bitcoin. If you're new to the channel, you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below if you want to. And as always, a big thank you to my Patreon subscribers. Your support is greatly appreciated. If you're interested in joining the Patreon, we're coming up on the perfect time to do it, which will be the start of a new month. Better to do it on the second of the month, I think, or late on the first of the month, as it's an unfortunate thing that the time difference can mean that people think they've signed up on the first, but they've actually signed up according to Patreon on the last day of the month, and then they end up getting charged twice. The day they signed up and the first of the month. I don't want that to happen to you guys. If it does, I always provide a refund in those scenarios if that occurs. But so far as signing up, just be cautious and make sure that you're signing up on the first. Okay, and if you don't, and if you're really unsure, sign up on the second, and then you're absolutely guaranteed only getting charged once that month. Alright, so it's going to be another busy month for the dividend calendar and stock rating system as well for tier 3 patrons. We've got quite a few coming up, something to look forward to. And yeah, I'll leave you guys there. All the best, and I'll be back with you soon. Take care. Goodbye.